John, there you are. Great to see you. Peachtree Group, first time partner with OZ Pitch Day. Glad to get you guys on. You're going to be presenting a hotel deal, Residence Inn by Marriott, right next to the San Antonio Riverwalk in San Antonio, Texas. So, John, without further ado, the floor is yours for the next 10 minutes. Please dive in.
Great. Thanks, Jamie, and thanks everyone for taking the time this morning and glad to join OZ Pitch Day. So background quick, we'll talk a little bit about our firm, Peachtree Group, and then we'll dive quickly into the investment, which is in a currently under construction ground up residence in off the Riverwalk in downtown San Antonio. So just a little bit of background about the firm. Peachtree Group is an Atlanta-based real estate investment firm. We were founded 17 years ago, and we largely today are a lender, owner, and developer of hotels. And our specialty really is hospitality across the duration of our firm. Just for some quick background, you can see here, we have a pretty wide footprint of our investments, almost from coast to coast, most major states. And we have multi-billion dollars of investments in different categories. In development alone, we've done 50 investments or roughly $1.8 billion in total asset value. But what we're really here to talk about today is a ground up Riverwalk hotel. And so for those of you not familiar with San Antonio, the Riverwalk is one of the largest tourist destinations in the country in a vastly growing city such as San Antonio, Texas. Like I mentioned, we are currently under construction today with the investment. We started just in the past 30 days. The project is 171 rooms and is scheduled to open in the second quarter of 2026. So for those of you not familiar with hotels, this deal is a Residence Inn, which is an extended stay hotel or an all-suite product, with Marriott, which is the largest brand or franchisor in the world. To put that in perspective, they have approximately 160 million members in their loyalty program. And compared to all the other development investments you might be considering, what's really interesting about this is the fact that it's already under construction. So what does that mean? That means that we have closed a loan with a regional bank. We have secured all permits and entitlements. And maybe most importantly, we are now under a GMP contract for the actual construction cost, and that cost is therefore locked into the deal. And that's a pretty important part when you're considering a development investment opportunity, because all of those types of risks have largely been taken out of the picture. So let's talk a little bit about San Antonio for a second. So for those of you not familiar with San Antonio, it is one of the 4 major cities in Texas. And what's really interesting about the city are a couple things. One, compared to Dallas and Austin, for example, it is the lowest cost of living, which is driving a ton of growth on top of what is already a vastly growing state of Texas altogether. San Antonio is really well known for a couple things. One, tourist demand from the Alamo and the Riverwalk, but also from a business perspective, it has a really robust economy built around the military bases. In fact, San Antonio is known as Military City, USA, because there's 5 joint bases in and around the San Antonio area. Now that drives a lot of private demand opportunities, such as private business in cybersecurity, IT, other defense spending categories. And that's a big advantage of being in this particular market. If you can see on the screen here, our hotel is just off the Riverwalk, 1 block in downtown San Antonio. Now, for a second, I want you to kind of split the screen in half and think about the left side as the west and the right side as the east. All the little orange dots here on the map are different hotels downtown San Antonio. We really love our location for one very simple reason. If you look at the east side of the Riverwalk, so dots 7, 9, 8, and 10, although that's not terribly important, those hotels are closest to the convention center. But those hotels on the west side where we're located are closest to the University of Texas at San Antonio, so great educational demand, the core business district downtown, the government hub. And so where I'm going with this is actually the west side of the Riverwalk and hotels located in the area outperform those hotels on the east side of the Riverwalk. And that's for a very one simple reason. They have a greater access to diversified demand than those hotels on the east side do. And in fact, when there's a convention in town, or maybe it's mid-July and tourism is robust, we're going to benefit from demand compression and be able to drive higher rates. And then, for example, when it's maybe December and tourist demand or convention demand isn't robust, we still have all this great other demand factor, such as the elements I just mentioned, really being able to drive robust demand for our part of the downtown market. Now, the total deal size here is $61 million. The leverage on this is a 40% loan, and we purposely design our opportunity zone investments for a lower leverage assumption so that after opening, we can refinance and have a greater difference to be able to put distributions out to our investors. And that's one of the things that makes Peachtree's opportunity zone strategy perhaps a little bit different than others. The deal is underwritten, as you can imagine, for a total 10-year hold, of which we plan to sell the hotel after that 10-year period. Today, we've raised approximately 50% of the total $20 million of equity in this offering, and we anticipate closing that in the first quarter of next year. Lastly, I'll share that one of the unique things about this deal is in our partnership with Marriott, they're giving us what's called $2 million of key money. And that key money, in essence, is cash that they'll pay upon opening of the asset. And it's our intention to put that cash through the distributions after opening of this hotel. So I'll conclude by saying this development investment is in a ground up residence in downtown San Antonio, one block off the Riverwalk. It is an under construction asset, meaning a lot of the risks have been taken off the table. It's scheduled to open in the second quarter of 2026 and is a total of 10-year hold period. Jimmy, happy to take any questions and appreciate the time today.
Yeah, absolutely. Thanks for being so prompt with your presentation, John. Love it. We really didn't get hardly any hotel deals at all since COVID struck. We had a few OZ funds that were focused on the hotel and hospitality asset class early on in the lifespan of opportunity zones in 2018 and 2019, but haven't really seen a lot since then. Can you question from me? And by the way, if anybody else out there has any questions, please feel free to submit them and I'll read them. Can you just kind of characterize the asset class in general, how it has rebounded from COVID over the last year or two here?
Yeah, it's a great question. I think one of the unique things about the hotel world is performance is largely back to 2019, or call it pre-COVID levels. But one of the other things that's really interesting about the hotel world today, and what is largely going to remain a higher inflationary environment, we have the ability to reprice daily, meaning the rates you see at a hotel are different today than tomorrow. So we can be much more reactionary to a higher inflationary environment than other asset classes. I think the other thing that you'll see that's interesting about the hotel world is if you look at other asset types out there, they've had a pretty significant decrease on their valuations compared to pre-COVID. But because hotels trade at a higher cap rate than the risk-free rate, they've been less impacted on their valuations than any other asset class. So overall, there's a lot of positive trends on why hotel investments are really in favor today and looked at more and more by a lot of the large institutional players out there in the global landscape.
Perfect. By the way, John and I had a podcast interview several weeks back. I'll link to that in the chat here in a moment if you want to take a deeper dive. He went deep on the hotel asset class, and it's a great listener or watch if you're interested in learning more. We're going to get to Eric Hayden at Urban Catalyst in just another couple of minutes here, but did want to get to a couple of more questions that came in for you, John. Mitch asks, and Mitch, great to see you here. Haven't seen you in a little while, but great to see you back here. He asks, could you share a few of the investor terms with us? Is there a preferred return? Any split profits? How does the waterfall structure look exactly?
So on the question of the returns, it's an 8% preferred return, then a 20% catch up and a split after that. The other thing that I'll share that's interesting about the economics here is it's a total 4% development fee, of which 25% of that with our partner is at risk at the end of the development if there is some type of issue. So that's another unique element about how we prioritize kind of our investors' needs in the total economic structure of the deal.
Yeah, and Brad had a similar question. He wanted waterfall, distribution splits, development fee, any other sponsor fees? I don't know if there's anything else.
There are a few other fees in the deal, such as a debt placement fee, which are normal broker fees you see in a lot of deals out there today. Again, all of that can be found within the PPM that's existing, as well as further expanded upon in the YouTube video Jimmy just mentioned as well.
Good stuff. I'll link to that in a moment here. One more question from Tom, and then I'll cut you loose, John. And if you have any other questions for John, I can share his contact info, and I'll send you to the podcast recording as well. But Tom asks, when does the 10-year hold period clock start? And does all of the LPs tag along that project's 10-year hold period in satisfying the QOZ required holding period?
Yeah, it starts when the dollars go in. So it's think about it. It's a 2-year construction, 8-year operating period. And then, of course, all investors would exit the investment at the same time upon a terminal sale of this particular hotel.
That's right. And just know that your individual clock though starts the day that you get your dollars in, right? As an
Correct.
investor. Okay. Very good. John, that's all the time we have. I think we got through all the questions. If anybody else has any other questions for John, I'll share his contact info. Just let me know if you have any other questions for John. John, Peachtree Group, thanks for being here today. Great project in San Antonio, just adjacent to the Riverwalk there. Really appreciate your time and support of OZ Pitch Day. Thanks, John.
Thanks, Jimmy. Appreciate your time.